but I want to talk about the stock market and why I think real estate is a much better, far superior investment in your portfolio than the stock market. Yes, I understand stocks might have a higher appreciation. So I was predicting high inflation, which we were over 9% at one point.
We were in negotiations. Investing in real estate, they're winning, they're making money.
What's up, everyone? Welcome to the Real Estate Educators Podcast. We provide the education you can build on. I am your host, Kevin Amos. What we're doing so different here is we're doing these solo podcasts. And I got to tell you, this podcast has been so much fun, both interviewing experts and getting to know these amazing people across the country, and also now doing these solo podcasts where I could help provide the value that I think will help you in your real estate journey and your wealth creation. So if you're out there buying properties, you're out there educating real estate investors, this is the podcast for you. I hope you get a lot of value from this. I got a pretty controversial episode this month. We are releasing these once per month, but I want to talk about the stock market and why I think real estate is a much better, far superior investment in your portfolio than the stock market. Now, before I get too far, because I know you guys are already wanting to throw something at me, we are not I am not telling you to only buy real estate and have that as your sole investment in your portfolio. I think you should have exposure to the stock market as well. But I want to go through some 8 reasons why I think real estate is a better investment than stocks. But think about this. And I was thinking about this several years ago. The 401k that you're investing, it's kind of hard to have good options, good way to diversify that. You're sort of stuck in the stock market with that kind of investment. A lot of IRAs are like that as well, unless you go the self-directed route. So a lot of your retirement money is already in the stock market. So you have exposure to public equities already. So true diversification is investing outside of the stock market. Get into Main Street, get off of Wall Street into Main Street with at least some of your portfolio. And real estate is a fantastic investment for that. So let's talk about some of the reasons I believe real estate is better. Number one, and this kind of has a 4-part piece to it, but there really is 4 ways to make money in owning rental property. There's lots of ways to make money in real estate, but if we're going to focus just on long-term investment, long-term leases, the very traditional bread and butter rental property investment formula, let's say, there's 4 ways to make money. And you might have heard these before, but the first one is appreciation. So how much value are you going to gain in the home going up in value over time? We know that long term, you're looking at 5-ish% return on appreciation on your home. So if you're going to compare stocks to real estate and you're only going to be looking at appreciation, you might find stocks outperform. You're closer to 10% long term in the S&P, let's say, and you might be 5% on real estate. But if you hit good years in real estate, you can hit good years in the stock market. One thing, which is another reason I'm going to talk about real estate as being better, is the stability. But let's say just appreciation. Yes, I understand stocks might have a higher appreciation, and so many people that are stock market fans will argue with me that if the returns are higher on that. But look, you're only looking at one thing. So appreciation is one way real estate creates wealth. Number two, depreciation, which you stock market fans out there, you don't consider this. So as you own property and it's actually going up in value, the government is going to give you credit for or assume that the useful life is being used up. So it's going down in value. And every year, whatever amount the government says it went down in value, there's a formula. But whatever that amount is, that is tax deductible. You get the benefit of deducting an expense on your tax returns that is not an actual expense. It's a phantom expense, and it's not only allowed, it's required that you take this expense from the IRS. So owning rental property gives you phantom losses in the form of depreciation, which you will not get in the stock market. Number 3, cash flow. I do understand, guys, that sometimes stocks produce cash flow in the form of dividends, but typically, in REITs especially, But typically, if you are getting dividends, that's slowing the growth of the company because they're not reinvesting it, they're paying it out. So you are getting the current dividend income, potentially giving up on some of your future gains, but it's not going to be anywhere near the dividend, won't be anywhere near the cash flow you can get on good real estate assets. So, number three benefit is cash flow. And then finally, this is one that you're not going to see in the stock market either. It's loan pay down. Every single month, your tenant is paying off your loan. They pay you a rent, you pay your mortgage payment, you keep the difference. Well, each mortgage payment is reducing principal by a certain amount, and that amount increases every single month. So over time, you accelerate your wealth creation through loan pay downs. It's a beautiful, beautiful thing. Number two, so that's number one, is the for profit centers in rental real estate and why I like it better than stocks. Number two, 1031 exchanges. So when you sell a stock and it goes up in value, you have to pay the difference between what you paid for it, your basis, and what you sold it for. That difference is called your gain. Now, as long as you held it for 12 months, you're in the long-term gain status, a long-term capital gain, and it's going to be a manageable tax hit, 15, 20, maybe a tad higher with Obamacare percent. That's going to be your tax, right? Well, in real estate, it's the same thing. Whatever the value increase is, you're going to have to pay gain on that as well, unless you roll that into another property. So you could literally keep stepping up. Maybe it's a single condo, then you buy a single family, then you buy a fourplex, then you buy a small apartment building. Each time you do that, all you're doing is deferring your capital gains for a future date. It's a huge benefit. You get to keep your money working for you instead of paying it out in taxes. And then eventually you'd either have to pay it out in taxes, or if you die without selling that final property, you will never pay tax on those gains. So you could literally never pay capital gains tax on your real estate, even though you're selling to upgrade into higher, more desirable properties with higher cash flow and higher income potential. So number two, 1031 exchange. Number three, it's inflation hedge. When I was getting ready for this solo podcast here on the Real Estate Educators, I went back and watched a couple of videos that I did on why I think real estate is better than stocks. And it was interesting because it was over 3 years ago. And I remember we're just coming out of all the COVID stuff. And I was saying, and I was preaching on that video, you guys, real estate's a great investment. It's a great investment. Turns out there were gains of 17 to 20% in real estate. But I wasn't even considering the potential appreciation through all the government stimulus. What I was considering is that the inflation that was going to come after that government stimulus. So I was predicting high inflation, which we were over 9% at one point, way before it came. And it's obvious because it was government spending. Well, now we have a new administration and we have high inflationary policies. All of that's going to be taking effect and it's going to be coming down the pike. And guess what I'm predicting? Yes, that is right. More inflation. And real estate, because it's a real asset, you can go out and physically touch it. Typically, real assets are inflation hedges. So as inflation goes up, so does the value of your property. So does your rent that your tenant pays, all of that. So it's a good hedge if you think that there's more inflation coming. Number four reasons real estate's better than stocks is you could find value. Now, I know there's people out there that trade daily, day trade, and they can go out and find great deals and get in and out of stocks and make money. I get it, but it's very, very difficult. In real estate, at least this is my opinion here, real estate is much easier to find values because we're looking for problems we could solve. If you could find a seller that doesn't want the house, which they're all over the place, divorces, bankruptcies, terrible tenants, there's lots and lots of reasons that will drive motivation for a seller, but they will discount their property just to get rid of that problem. So if you're able to solve a personal problem from an owner of a house by buying that house, you can find value in real estate buys. My opinion, again, far easier than you're ever going to find values in real estate. I'm sorry, in stocks. And especially someone like me, I don't understand the stock market that well, guys. And I am not going to try to get on there and compete buying individual stocks with these like stock geniuses and hedge funds and mutual funds and family offices would like where they do this full time. I'm not going to compete with that. I highly believe that stocks trade at their current value. I don't think that you could find value. Now they might go up or down in value after you buy it, but I don't think you're getting a discount on a stock purchase like you can in real estate. Number 5, real estate is finite, and this is sort of comes back to the inflation hedge here. Real assets are typically finite, meaning they're limited. So there's only so much land, there's only so much houses, and eventually it's going to be gone. So when you have a scarcity, a limit of supply, that drives prices up. So I know real estate values go up and down, but in general, they will increase in value over time because there's a limited supply of it. So real estate is finite. Number 6, not only can you find great deals in real estate, but you could add value to real estate. And there's multiple ways to do this. And none of this you could do in the stock market. I'll give you an example. If you're out there fixing and flipping, a lot of our listeners fix and flip properties. They're adding value and that's creating their income, right? They buy low, fix it up, sell high. It's a pretty simple formula. But there's some repairs that you can make to a property that are highly profitable. Like if you finish a kitchen and you put $10,000 into a kitchen, for example, that's one of those areas that really increase the value of a home. So that $10,000 investment into that kitchen might produce $30,000 or $40,000 in increased value or increased desirability of that property. And that increase in value is all like profit for you, and you cannot do that in the stock market. So one way you can increase value with real estate purchases is improving the value, adding to it, finishing basements, adding bedrooms, that kind of thing. Number 2, you could add value by how you exit or liquidate. So here's a couple of real simple examples. If I'm willing to carry a loan for someone that wants to buy the property from me so that they can limit their down payment, they're typically willing to pay more for that house because of those flexible terms. So I literally drove the value of the real estate up only because I'm offering some creative financing for a new buyer. Same can be true for rent, like your tenants. If I could be creative and find ways to increase rent just by making it more flexible for them. For example, let's say I'm going to do a rent to own and I'm going to give you the option to buy it. And I'm going to lock in a price and make sure I'm adding value to you as well. Will you pay me $200 or $300 or $400 more per month for that ability to buy it at a set locked in price? Well, that just increased the monthly income on that property only because I am being more creative with what I'm offering them. Interesting thing, what I was doing a lot when I was sort of getting going here was doing a lot of rent to owns, and I would require a down payment. Like this is more of a buy than a rent. So if you want to rent to own this property, you need to put 3, 4, 5% of the final price down. Well, a lot of them didn't have 3, 4, 5% down, 10, 15 grand. But what I would do is say, okay, I'll loan it to you at a reasonable interest rate, 3% or 4% interest rate. And then you just pay your rent to own rent payment, your lease payment, plus pay off this note for your down payment. And it really shot up the monthly income just by simply loaning the option consideration or that premium that I needed down for the rent to own contract. So those are some creative ways to add value. I don't know any way to do that. I don't know any way to add value to a stock, like to force it to appreciate. So that's another reason real estate is better than the stock market. Number 7 here, enjoy it. I said this in the video. I don't remember the last time I went out on my deck with my cup of coffee and enjoyed the sunrise or the sunset on my brand new stock, right? Real estate is something that you can enjoy. Now, I'm talking mostly in this video about rental properties, but your home or a second home or something like that, even if you're Airbnb it, but every once in a while using it, like I do for a second home that we own, I get to enjoy our home in the wintertime. It's very close to the ski resorts. I enjoy it. And then I produce income with it when it's off season or when we're not using it. So I get to enjoy that investment, and it does go up in value. We are paying down the loan, all of those benefits, and I get to enjoy it. Number 8 here, the final one, number 8 is leverage. You could leverage into real estate far easier than you could leverage into stocks. Now, I know there's margin accounts and I know there's ways that you could use leverage in stock market. Options is a great example for those sophisticated investors out there that are about to beat me up. I do get it. There are ways to do this, but it's far easier in real estate. Anybody can get not anybody. Most real estate investors can get loans to buy properties. In fact, it's expected you're going to go out there and borrow money when you're buying properties as a real estate investor, especially in the single family home business. So a quick example of why leverage works so well in real estate. I'm just going to use some numbers here. Let's say we have a $100,000 house. I'm trying to keep this super, super simple just to get my point across. And I'm going to do a 10% down payment. Okay. So let's say I'm buying a house. I have 10% down. It's $100,000. So I'm paying $10,000. That's my down payment to control a $100,000 asset. Or let's say it goes up 10%. We can do either way, but let's say it's going to go up 10%. I'm going to do a 20% down payment because that's more realistic for today. Right? The banks want 20% down payments for investment home. So I'm going to put $20,000 down, not 10, but it's going to go up $10,000 in value. $100,000 asset I control with a $20,000 down payment goes up 10%. That's $10,000 in appreciation divided by my investment of $20,000. That's a 50% return. Now you're saying, well, how are you going to get a property to go up 10% in 1 year? Well, I never said it was 1 year. What if this is a 2-year or 3-year? Maybe it's a 3-year or 2-year investment and goes up $10,000 in those couple of years. That alone is 50% return on the appreciation, and not counting loan pay down, not accounting tax benefit, not cash flow. So at the very beginning of this video, I said one of the reasons I like real estate over stocks is appreciation. And I know appreciation in the stock market tends to be higher than it does in real estate. Okay, I get it, but that's unleveraged real estate. Here, I just showed you an example of leveraged real estate and how far better that's going to be than the appreciation in the stock market. I also know that real estate goes up and down in value. So there's a double-edged sword here, but stocks go up and down in value. Also, in fact, significantly more than real estate, which is my bonus reason I like real estate over stocks, and that's the stability. It does go up in value. It does go down in value. It just like any other asset, there is a market. So there's going to be ups and downs. The difference is in real estate, the market moves slowly. It's not moving 1% in one afternoon like you would see. Even a big pool of companies like the S&P, that'll still move 1-2% in a single day. You don't find that in real estate. So if you're looking for something that's a bit more stable, that has 4 ways to produce income, that has a 1031 exchange, it's an inflation hedge, you can find value. Real estate is finite. You can add value, you can enjoy it, and you could leverage into it. Those are the reasons why real estate is a far better investment than stocks. All right, let's have it. Go ahead, beat me up. Leave me some comments below. Let me know what you think. Hopefully you got some value out of this podcast episode, the Real Estate Educators Podcast. Hopefully you got some value if you're watching on the video. Hit like, hit subscribe, leave me some comments, and I hope you make this day a great one. Hey guys, I hope you enjoyed this episode as much as I did. If you did, please be sure to follow and leave us a review. Oh yeah, and tell a friend.